Buyers are getting back in the driver's seat with house prices plunging at their fastest rate since the global financial crisis. So is this good news for would-be homeowners or just bad news for all of us? The housing market nosedive is picking up the pace.
The house prices in Australia are dropping at their fastest rate
since the global financial crisis.
Capital cities are now suffering monthly price falls all down the eastern seaboard.
New data revealing the median property value across the country has dropped 2% since April to just over $747,000. With predictions prices could fall by 12 to 20% by the end of 2023 in the wake of interest rate hikes. During the GFC, prices fell by just around 8.5%.
The overarching theme here is how high inflation gets and how high those interest rates reach, because Australian households are holding record levels of debt, which means that they are going to be more sensitive to higher interest rates.
It's the third successive monthly drop, Sydney falling at its sharpest rate in almost 40 years, dropping 2.2% in July, and for the first time since 2020, regional property prices are sliding too.
What we're seeing now is better opportunities for buyers in the market. What we've seen is a dilution of competition. For first home buyers though, as time ticks on, the higher interest rates become, the more it's going to deteriorate your borrowing capacity.
The cool down won't necessarily improve housing affordability.
What we can learn from previous downturns is that the period that prices decline are normally shorter and less severe than the preceding upswing. So it's very unlikely that we're going to see prices dip back to what they were pre-pandemic.
Australia has one of the most expensive property markets in the world.
Sold to you, sir. Congratulations.
So is this the correction we had to have?
Well, Eliza Owen is a property analyst at CoreLogic and she joins us now to talk more about this. Eliza, despite predictions property prices were going to tank, they went up around 30% during the pandemic. Is this drop just inevitable?
Well, that increase you talk about was largely due to interest rates, and that's pretty much what we're seeing now. So over the past 3 months, as the cost of debt has risen, that's where we've seen Australian property values fall 2% in the same period of time. And it's the fastest rate of decline we've seen, as you say, since the GFC and before then the 1980s.
So why are they falling so quickly?
I think it's the pace of the rate rises that we've been seeing. And that's kind of part of the grand plan, right? If people are spending more money on their mortgages, it means they're spending less elsewhere, which helps to curb inflation. And it also means our debt levels don't rise as quickly because less people want to buy at higher rates. So the more we see those rates rise, the more downward pressure on the property market we're going to see.
So, Eliza, it's been a seller's market forever, so it flips. Is that good news for first home buyers?
Look, there are pros and cons if you're a first home buyer right now. In most capital cities, property prices are lower, properties are taking longer to sell, so buyers definitely have more power at the negotiating table. It's just worth noting that that's off the back of higher interest rates. So in the short term, at least, it could make your mortgage more expensive. During winter as well, you don't get as much new stock on the market, so there's not a ton of choice right now for some buyers, but that could change as we come into the spring selling season in the next few weeks.
And then there are renters, and this is, I mean, wow. Rent is up nearly 10% in the past year, so that's multiples more than would happen in a normal year. What's going on there?
Yeah, I know we haven't seen this kind of rental increase since 2007. It's basically increased domestic demand for rentals as people spread out during COVID. Plus, you've got more overseas arrivals as Australia opens its travel, its borders as well. And it happens to increase with rates as well. So I think in the short term, we could start to see a bit more share housing as people try to cope with the increased cost of living.
So, Eliza, let me see if I can put this all together. Because of galloping interest rates at the moment, house prices are falling, but not in a way that actually makes housing affordability better for people who aren't yet in the market. So no one wins out of that. Meanwhile, that's being done, the rate rise is being done to deal with inflation, but actually inflation is still just going nuts. The only thing that's going down is the housing prices, which isn't helping anybody. Why are we increasing interest rates so rapidly again?
Yeah, look, I think that at least a bit of light at the end of the tunnel for renters is that we're starting to see rents come off a bit in regional Australia in particular. So that will start to bring inflation down as rents fall because they comprise part of the CPI as well. For first home buyers, it's going to be a very particular situation if you have a lot of savings, for example, that this period of time can benefit you. I think that we're going to see a lot more of the affordability debate shift from the deposit hurdle to actual serviceability of the mortgage.
We actually are talking about the regional rental crisis a little later in the show. So, Eliza, thanks so much for your time tonight.
Thank you.